Good afternoon, traders. Welcome to LTP Digital Assets Market Commentary. My name is Johnny. I'm a research analyst at LTP Research, and today I'm guiding you through the September market commentary. In this commentary, we have 5 sections. First, we have a summary of September market, and then we have the main content for market commentary, which will include macroeconomics and crypto economics. And then we'll have some news highlights. Moving on, we'll have October volatility, and the last session will have some appendix materials. In September, we saw a broad-based market correction, as we saw the US dollar index surge to its yearly high. In light of this, the stock markets also corrected. The S&P 500 depreciated by 5.3%, while the Nasdaq declined by 6.4%. As the US dollar index was very bullish in September, gold retraced by 4.7%. However, Bitcoin stood out performing well, recording a 4% increase in September. We actually saw a decorrelation between the performance of Bitcoin and these major financial instruments, the S&P 500, the Nasdaq, and also gold. We will continue to watch this decorrelation between Bitcoin and these financial instruments. Generally speaking, the strengthening of the US dollar results in a risk-off market sentiment, which often leads to underperformance of equities and risky assets, including Bitcoin and other cryptocurrencies. Apart from the market correction, we also saw rising long-dated treasury yields. So the bond yields with 10-year, 20-year, and 30-year reaching their highest level since 2008. The Federal Reserve maintained interest rates at 5.25% to 5.5% in September FOMC, so no rate hike this month. While market has started pricing in potential rate cuts as early as the second half of 2024, we have to be reminded that Jay Powell said that more interest rates are coming. The increase in Consumer Price Index (CPI) year-over-year jumped to 3.7% in August. At the same time, we also saw a rise in energy prices. For example, oil price and also gas price have been rising continuously and surging to yearly high in 2023. So this is rather a concerning issue regarding the efficacy of efforts to combat inflation. In light of this macroeconomic background, commercial traders on Chicago Mercantile Exchange maintained aggressive net short positions with Bitcoin. So they were pretty net short in September. The collective cryptocurrency markets experienced reduced trading volume and activity in September. The aggregate open interest with Bitcoin Perpetual futures did not recover since the last sell-off in August. Additionally, there was a shift in trading volume and activity from BTCTUSD to BTCFDUSD on Binance. So we saw a migration of trading activities and trading volume from the TUSD pair to FDUSD pair. Regarding the performance of cryptocurrencies in September, Layer 1 and Layer 2 tokens generally outperformed GameFi and Metaverse tokens in September. Among Layer 1 cryptocurrencies, LINK Link outperformed the rest. In terms of regulatory developments, the SEC has recently postponed its decision on spot Bitcoin ETF applications, which includes the major applicants such as BlackRock and Fidelity. At the same time, the SEC warned that some additional crypto exchanges, dealers, brokers could face charges regarding inadequate disclosures or failure to register with SEC. So this is basically the summary of September 2023. So let's jump right into the main content of the market commentary. To begin with, let's have a review regarding the macroeconomic outlook. So first, we have this chart featuring the long-dated bond yields. As we can see from the chart, we have CPI year-over-year. We have federal funds effective rate, so the Fed funds rate. We also have some long-dated treasury yields, the 10-year, 20-year, and 30-year. And also have the navy line, which features the unemployment rate. So first, the main takeaway here is the CPI year-over-year. It jumped from 3.3% to 3.7% in August, exceeding expectations and fueling concerns about the potential for sustained inflationary pressures. At the same time, we also saw rising bond yields. So the 10-year, 20-year, and 30-year bond yields have broken their previous high in 2022 November. So at the time of writing, the 10-year yield has actually reached 4.6%. The 20-year yield has reached 4.91%, and the 30-year yield has reached 4.71%. Meanwhile, unemployment rate in August remained at 3.8%. The rising bond yields actually suggested that investors are increasingly concerned about the inflationary pressure in the medium to long term, and also the Fed's higher for longer policy. Moving on, we have a multi-asset year-to-date return chart, and also we have an indicator below which features Bitcoin's correlation to these financial instruments. So in September, we saw a very strong downtrend, market correction of these financial instruments, including the S&P and Nasdaq and gold. However, Bitcoin among these financial instruments stood out performing well in September, which was contradictory to the performance of other financial instruments. So this contradiction in Bitcoin's performance to other financial instruments is also reflected below the correlation coefficient indicator here. We are seeing the correlation coefficient of Bitcoin to other financial instruments declining in September. We also have to look at the DXY, the US dollar index. The y-axis is inverted, so we see a downtrend here, which means that the DXY is going upward. Generally speaking, a stronger dollar means risk-off sentiment, and we tend to see underperformance of equities and risky assets, including cryptocurrencies. We will continue to monitor the decorrelation between Bitcoin and other financial instruments, and we are anticipating Bitcoin to retrace in regard to a stronger dollar in October. Moving on, we have a chart featuring the commercial traders trading Bitcoin futures on Chicago Mercantile Exchange. We have an indicator below showing their net positions. So they have pretty net short since August, and they have not reduced their net short position, rather maintained their aggressive net short positions in September. This collective shorting behavior reflected their apprehension towards Bitcoin's performance in October and in the near future. Next, we have a price model for Bitcoin. So currently, Bitcoin price is now retesting the 200 weeks moving average as well as the short-term holder cost basis. The long-term holder cost basis converge with the realized price at 20K. The 200-week moving average is a commonly used trend indicator. Price below the 200-week moving average is commonly conceived as a downtrend, and price above the 200 weeks moving average is commonly deemed as an uptrend. Next, we have a chart featuring the total stablecoin circulating supply, the blue line featuring the total number of staked ETH, the orange line featuring the Bitcoin market cap, the navy line here featuring the total lock value on DeFi with Ethereum chain, and below we have a stablecoin supply ratio oscillator, which measures the total purchasing power of these stablecoin to Bitcoin. So in September, we are seeing a continued increase in total number of staked ETH. So more Ethereum holders are staking their ETH to earn the rewards. According to staking rewards, the current staking yield stands at 3.5%. On the other hand, the top 4 stablecoins aggregate circulating supply is still on the decline, reaching 114 billion in September. Bitcoin market cap has been relatively stable in September, as Bitcoin price was held in consolidation in September. And then let's have a look at this chart featuring the spot volume of cryptocurrency exchanges, decentralized cryptocurrency exchanges, and also derivatives volume of cryptocurrency exchanges. In September, the total spot volume of cryptocurrency exchanges remained relatively stable compared to August, and we saw an increase in spot volume of a bit. As for decentralized cryptocurrency exchanges, in September we saw decreased trading volume. As for derivatives volume of cryptocurrency exchanges in September, we saw relatively unchanged trading volume compared to August. Moving on, we have a stacked bar chart showing the futures pairs traded on Binance. Specifically, they are all FAPI futures pairs. So we can see Bitcoin at the bottom of the stacked bar charts, and then Ethereum at the second lowest stacked bar chart. They actually compose the majority of trading volume on Binance. In early September, there was a notable increase in trading volume for Cyber and Perp. In mid-September, we saw increased trading volume for TRB. Meanwhile, the trading volume on weekends tend to be small. However, certain altcoins such as Perp, TRB, and WLD saw active trading on weekends. Moving on, we have a similar chart, but they feature calm margined pairs instead of FAPI pairs. As we can see from the chart, Bitcoin and Ethereum contributed to most of the trading volume for the core margin pairs. Apart from Bitcoin and Ethereum, the most traded core margin pairs were SOL, LTC, Link, and BNB. So let's have a look at Binance trading volume. Specifically, we'll look into Bitcoin spot volume by pairs, USDT pair, TUSD pair, and also FDUSD pair. And we'll also look into Ethereum, Perpetual futures, and spot trading volume. So first, let's look at BTCUSDT spot volume. In September, it remained relatively subdued. For BTCTUSD spot volume, we saw significantly decreased trading volume in September. At the same time, we saw increased trading volume for BTCFDUSD pair in September on Binance. So there was a migration of trading activities and volume from BTC2USD to BTCFDUSD, as we can see from this chart. Currently, BTCFDUSD contributed half of the total trading volume of Bitcoin spot market in Binance. As for Ethereum, the spot market and perpetual futures market remain relatively stable compared to August. Moving on, we have Bitcoin and Ethereum spot and perpetual futures trading volume on Bybit. We actually saw increased trading volume for both Bitcoin and Ethereum in the spot markets on Bybit in September. As for perpetual futures, they remain relatively stable compared to August. Additionally, let's look into the trading volume of Bitcoin and Ethereum spot and perpetual futures market on OKX. We actually saw a slight increase for Bitcoin, Ethereum spot market, and also Ethereum perpetual futures market. The trading volume of Bitcoin perpetual futures on OKX remained relatively stable compared to August. So next we have a price density chart, which features the FAPI pairs on Binance and their relative price density. Price density is actually a measurement of an asset's behavior in terms of turbulence and also smoothness. So when it gives a higher reading, it means higher noise. So the price is not very efficient. When it has a lower reading, it means lower noise, which means the price is more smooth and efficient. So in September, XCM exhibited the highest price density, while ETH-BTC exhibited the lowest price density, and also AMB-USDT. So moving on, we'll have an annualized volatility 30-day rolling chart of Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. In September, we saw decreased annualized volatility for these cryptos. As for trading traffic, we have a piece of analysis of Bitcoin perpetual futures on Binance and its trading traffic. We tend to see higher trading volume and higher trading activities during the period where London trading section overlaps New York trading section. Moving on, we also have a 3% market depth chart featuring Bitcoin perpetual futures on Binance. So we can see the aggregate market depth actually decreased during the sell-off which occurred in mid-August. However, liquidity condition has been eased and liquidity has been picking up since then. Moving on, we have a Bitcoin and DXY chart. We have aggregate open interest. We have long-short liquidation and also aggregate funding rate. So the takeaway from this chart is that since the sell-off which occurred in mid-August, as we can see there was a wipeout of an aggregate open interest. Since then, we did not see the aggregate open interest recover. It has remained relatively subdued. So the takeaway is that since the last sell-off, market participants have been unwilling to participate in the market again, specifically in the Bitcoin perpetual futures market. So next, I want to show you a chart featuring Bitcoin perpetual futures liquidation, which occurred on 30th of August 2023. We can actually see a pump and dump schematic here. And also we have an indicator of volume, an indicator of take a buy and take a sell volume. On 29th of August, 6 p.m. UTC, we actually saw a very strong increase in price action, initiated by a strong volume and a lot of take a buy orders. After price reached 28K, it remained relatively stable in consolidation, and we saw a lack of trading volume for both sides. So the rally was not sustained, and later on after 2 days, on 31st of August, the sell-off occurred and liquidated a lot of long chases here. Next, I also want to show you another chart featuring Bitcoin perpetual futures liquidation event which happened on the 11th of September 2023. Before we dive into this chart and also the details of this chart, I want to take you to the previous slide to give you a brief background information. So we extracted the price action here. As we can see on the 11th of September, we actually saw a stop hunt here, which took out a lot of traders' stop loss position here. At the same time, we also saw a dip in crypto margin open interest, roughly 0.4 billion here. So let's get back to the order flow visualization. So we can see a cascade of ticker sell orders, which drove price below the August range low, where it's likely that stop loss orders were positioned. The following day, after the ticker sell orders were exhausted and the stop loss order were absorbed, aggressive ticker buy orders came in, drove price above 25K800 and triggered a lot of late short recovery, as we can see in this here. A lot of ticker buy, which were actually short recovering orders. And here, a lot of ticker sell orders, they are long liquidation and stop loss orders. So outside liquidation zone, trading volume remained relatively subdued, as we can see. Moving on, I also want to dive into the premium and discount volume and volume ratio of BTCFDUSD, a new pair on Binance, and also comparing it to BTCUSDT and also BTCTUSD, and see what's going on within these three pairs. So Binance launched FDUSD on August 4th here, offering zero maker and ticket fees. The trading volume of BTCFDUSD started to pick up since September 5th, which we can see here, FDUSD volume starting to increase here. So we also have a volume ratio here. When it goes up, the volume of BTCFDUSD increases relative to BTCUSDT. So we can see that currently it contributes to almost half of the trading volume of BTCUSDT, and together they comprise of almost all of the spot trading volume on Binance for Bitcoin. Meanwhile, it's also interesting to see that since 29th of August, BTCFDUSD has been trading in a premium relative to BTCUSDT before it was actually in a discount. So certainly there have been more trading activities going on within the BTCFDUSD pair. And in the next episode, we even want to dive deeper to see in the micro time frame how price is behaving within the BTCFDUSD pair and BTCTUSD pair and also BTCUSDT pair. So as I mentioned in the earlier section, BTCTUSD pair, as we can see, is trading volume here, BTCUSDT volume in orange and BTCTUSD in blue. BTCTUSD trading volume decreased significantly since September 5th, as we can see here. So the trading volume of BTCTUSD was before September was almost twice to 3 times to BTCUSDT trading volume, but now it's almost slim to none. Despite that the trading volume for BTCTUSD decreased significantly, it's still trading at a premium over USDT, which is quite interesting in my own opinion. So when we compare the price of BTCFDUSD and BTCTUSD, it's clear that BTCFDUSD is in a discount relative to BTCTUSD, which means that despite that BTCTUSD has lost a lot of trading volume, it's still trading at a premium over BTCFDUSD and BTCUSDT, which is very interesting. The orange bars represent BTCTUSD volume, which disappeared since 6th of September. No more orange bars here, no more USD trading volume. And the trading volume migrated to BTCFDUSD and also BTCUSDT. Moving on, let's have an overview of Layer 1's price performance in September. So Link outperformed, followed by TLX and Bitcoin Cash. Others tanked. For Layer 2, IMX outperformed. In the DeFi sector, we saw MakerDAO, Rune, Aave outperformed. As for GameFi and Metaverse sector, Magic outperformed, and the rest generally underperformed comparing to DeFi and Layer 1 and Layer 2 sectors. As for CEX tokens and Memecoins, KuCoin Shares token and also Flocky token outperformed the rest. So next we'll have a seasonality chart of S&P, Nasdaq, Gold, and Bitcoin. It's important to note that past performance is not indicative of future gains or any future results. But in terms of seasonality, October has historically been known as a turning point for market correction. So due to the time limit, I'm not going through the news highlight section with you guys. I'll attach a link below so you can visit our monthly commentary and read the PDF file, and then you can check out the links here. So in October, there are a few economic events that could bring volatility and also inject turbulence into the markets. So here is a list of them, and feel free to check it out. At the end of the commentary, we also provide a few appendix materials for your reference. So the first one, we have a macro chart featuring the Fed balance sheet, the Euro Central Bank's total assets, and TJ account, and also the reverse repo. So we are seeing right now in September money rotating out of the reverse repo and the treasury bills, that there have been more offering for treasury bills, and also the yields for the treasury bills are actually higher than that of reverse repo. So the second chart here shows CPI year-over-year change, crude oil prices and gas price. It's important to note that crude oil and also gas prices have been climbing up to yearly high in 2023, which was actually concerning since the energy prices are significant contributors to inflation, and the spike in energy prices adds to the overall concerns in the fight against inflation. So lastly, we'll have a Bitcoin liquidation heat map provided by High Block Capital. And above market price, we have a huge liquidation zone at 32K to 34K. Below market price, we have a huge liquidation zone located at 22K to 24K here. As we can see, the deep color representing the amount of total liquidation in the worth of USD. So thank you for your time sitting in with me. I hope you get something out of it. I hope it's insightful. So until we see you next time.